Well, hi there. Warm welcome. You're watching Times Now, and I'm Meghna Deka. Well, it seems like Donald Trump's reciprocal tariff medicine, as he likes to call it, is leading to severe side effects. That's right. Bears have taken control of the stock markets across the world. 14 lakh crore rupees has been wiped out in just one session. There was bloodbath on the Lal Street today. So what should you, the investor, do? Panic or hold on with your seatbelts tightly in place? Well, we are going to get you all the answers after this manic Monday mayhem that we have seen. But first, let's tell you what exactly has happened. Well, the Sensex opened with a cut of almost 400 points. Nifty 50 had shed close to 1,000 points in the morning as well. Well, you had the Sensex closing at 2,226 points lower with a cut of 2.95% at 73,137. When Nifty also had closed at 742 points, which is lower at 3.24% at 22,161. Well, it was quite a stressful day, as you can imagine, for all the investors. Look at these numbers there on your screens. Everything was in a red as they lost almost 14 lakh crore rupees, wondering what's the reason. It's important for us to understand. Remember, it's not only about the domestic markets. In this case, clearly it is the global markets which we have taken a cue from. In fact, let's explain it to you. The first, of course, reason is none other, there you have it, the man on your screens, Donald Trump. Well, him and his reciprocal tariffs on 60 countries. China, remember, however, is sitting at 34%. Many have said that's the silver lining for India. It has already said that there's going to be a 34% retaliation now, which will kick in from the 10th of April, increasing recession fears in the US. Now, actions of Trump has led to trade war fears escalating. Hence, the markets now are worried about the future. India, of course, has been following its Asian peers as well. So this is how the US market, it's important for us to understand how the US markets have reacted today. The S&P 500 nosedived to almost 6%, to the biggest decline since March 2020 that they have seen. In fact, Dow Jones has dropped 5.5% to 4.86, which was on Friday. Well, the biggest decline, of course, has been since June 2020 during the COVID-19 pandemic. And now this is the second biggest that we have seen since then. Well, the Nasdaq, meanwhile, composite, which is home to many tech companies that also sell to China and manufacture, has dropped as well. It has dropped by 5.8%. Well, the repercussions, of course, have been felt across the entire world, especially in Asia. Well, Japan's Nikkei, as you can see there on your screens, the way they've all nosedived, that stands at 7.8. When it comes to Australia's ASX 200, that is at 4.2% decline that it has seen. Then you also have South Korea's Kospi, which is down by 5.6%. So across the entire length and breadth of Asia, especially, has been quite badly hit. And in fact, let's also tell you how Hong Kong's Hang Seng was perhaps one of the worst hit. It fell by 14%. Well, there you have it, 14% drop for the Hang Seng. And in India, the Sensex and Nifty had the worst opening since March 2020, which was, remember, roughly the time of the lockdown during COVID pandemic. Well, a cut of over 4% for us. Well, market experts, meanwhile, say that investors shouldn't panic. It's important not to panic, but to avoid new investments till some clarity emerges about what next. Now, amid the global market crash, Donald Trump says there is no inflation. Oil prices and food prices are all down, he has declared. In fact, he has come down heavily on China's 34% retaliation tariff as well. In fact, in a way, reiterating his own warning to abusing countries, as he calls them. Here's what he said earlier on the way markets have been reacting. Watch this.
I don't want anything to go down, but sometimes you have to take medicine to fix something. I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that, because to me a deficit is a loss. We're going to have surpluses, or we're at worst going to be breaking even.
For me, deficit is a loss and we have a surplus. So when Trump says there's no inflation, US Federal Reserve Chair Jerome Powell has in fact got a different view on it. In fact, this is the interesting bit. He has said that inflation could be here to stay. In fact, he's further said that while tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Watch this.
While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem.
Meanwhile, back home, as there is about 14 lakh crore rupees which has been wiped out in one session itself, you have questions which are being asked of the government. No official word, remember, has come in from the centre. Political parties, meanwhile, have been taking pot shots at the government, demanding answers. Watch this.
अमेरिका के राष्ट्रपति ने स्टॉक मार्केट की धज्जियां उड़ा दी हैं, देखा होगा, देखा ना? अच्छा, आप मुझे बताइए, आप में से, इस भीड़ में से कितने लोग स्टॉक मार्केट में पैसा डालते हैं? हाथ उठा के दिखाइए। अब ये देखिए, घूम के देखिए, यहां पे 1% से कम लोग स्टॉक मार्केट में पैसा डालते हैं, 1% से कम। अगर यहां 100 लोग हैं तो एक हाथ उठ रहा है। तो ये स्टॉक मार्केट आपका औजार नहीं है। इसमें अनलिमिटेड पैसे बने, मगर इसका फायदा आपको नहीं मिला।
जो इकोनॉमी गिर रही है और अब संभलने वाली नहीं है, इसलिए नहीं संभलेगी कि जो अमेरिका जैसा देश आप पे इस तरह की पाबंदियां लगा रहा है। आपको अपनी इकोनॉमी बेहतर करने के लिए अमेरिका से कुछ सीखना पड़ेगा। आपको भी चीन पर पाबंदियां लगानी पड़ेंगी। क्या सरकार पाबंदियां लगाएगी?
So interestingly, Congress MP Shashi Tharoor, now he's known to be a long-time critic of the government. However, he has this time around got a different opinion. He says that we will have to bear this through. Watch this.
बहुत उम्मीद है कि जो बायलैटरल टॉक्स होंगे अमेरिका के साथ, उससे कुछ आश्वास मिल जाएंगे, कुछ रिलीफ मिल जाएंगे। लेकिन अभी के लिए शॉर्ट टर्म में तो ये तो काफ़ी नेगेटिव खबर है। और ट्रम्प साहब का टैरिफ्स का मतलब कोई समझा नहीं कि इसका क्या लॉजिक में किया है, क्योंकि अमेरिकन स्टॉक मार्केट भी बहुत बुरी तरह से, मेरे ख्याल में $2 ट्रिलियन खो गए हैं करीब 2 दिन में। तो ये तो जब हर देश पे ये असर हो रहा है, मेरे ख्याल में we'll just have to bear it.
So the question we are going to be asking on this show is, what next for us, the investors? Where are we headed? And what should the government do now? Should we be like China? But again, remember, he's warned of tariff abusers for not acknowledging his warning. Kare to kare kya, jaye to jaye kahan? That seems to be the big question. How do you escape this Trump tariff tornado? Let me put that question across. We have two specialists who are joining us, area experts. We have P.K. Basu, independent economist, Professor Arun Kumar, another economist joining us. Professor Kumar, I'm going to come to you first. Everyone's just asking, what do we do? Should we hold on? Should we sell? Should we buy?
So, these tariffs were supposed to be reciprocal tariffs.
Yes.
They're not reciprocal tariffs. They are actually protectionist. Reciprocal tariff meant that US would levy as much tariff as the trading partner did.
Correct.
Our average tariffs are 17%, their tariffs are 3%, so maybe 14% could have been seen as a possibility. But 26, 27%, there's no formula for it. The formula that has been given is rather vague. It says that if you have a trade surplus with us, we divide it by the export, and that gives you a percentage. We levy half the percentage of that. That's no formula. That's pure protectionism. You know, the gap between the US and China tariffs are not 54%, but they are being levied with 54%. So this is pure protectionism. It is going to lead towards de-globalization and de-dollarization. You already see that the dollar is declining. Usually earlier, whenever there was crisis, people would go into dollar. But now what's happening is that initially people did go into dollars, so the rupee and the other currencies declined. But suddenly now that has changed. So the rupee has strengthened slightly as compared to earlier, because I think America is no more a safe haven. People may go more into gold. So in other words, the problem that is coming is that when the prices rise in the US, the demand there would decline. And when the demand declines, the US economy would go down. So there'd be a problem of inflation as well as of reduction in output, which is stagflationary. That is hard to deal with. And that's why people fear that there may be recession. Now, when the US economy, which is 26% of the world economy, that goes down, then the other countries' exports to them will go down as well.
Absolutely.
Which will mean that the output in the other countries would also go down, and they would also head in that direction. The second effect would be that the uncertainty caused would mean that the foreign investors would leave the market, and therefore the stock markets would go down, the foreign exchange reserves will go down, and the currency will get affected. So the uncertainty which has been created, because we don't know what Mr. Trump says in the morning and what he says in the evening. You know, there's no real correlation, and the formula that he's giving is not the right formula for actually balancing trade. And finally, you see the WTO is being upturned. In the WTO, there were negotiations between various countries as to what tariffs would be acceptable. And, you know, the advanced countries had given these concessions to the developing world that they, you know, would open up their markets for investments and for intellectual property and services. And in return, they can levy higher tariffs. Now, that is being completely upturned. Now, the problem is that, you know, the intermediate technology jobs.
Oh, well, there seems to be.
He wants to bring that back. Now, that is not going to happen because the.
And that can't happen overnight. There seems to be a bit of a problem there. We'll just get that audio corrected for Professor Singh, for Professor Kumar. Let me go across to Mr. P.K. Basu as well. Very significant points which have been raised by Professor Kumar. As per Trump and Trumponomics, if we can call it that, he says that it's going to bring back manufacturing jobs into India. That's unlikely, back to America. That's unlikely to happen overnight. So what is to happen in the coming days? Because people are getting uneasy. The markets are getting uneasy. What's your advice to investors?
Well, investors should hold on because the bloodbath in the markets is, I think, overdone. There's a fear that the US is about to go into recession. Goldman Sachs has I think a 40% probability of US recession now. But remember, it's 40%. It's still less
45% by Goldman Sachs. 45% projection for a recession by Goldman Sachs. In fact, JP Morgan has said it's a 60% chance.
JP Morgan says 60% probability of global recession. I can assure you that in 1 year's time, if we meet again, there'll be a lot of egg on JP Morgan's face because that projection is ludicrous. It is based on the idea that everybody's going to reciprocate and retaliate against the US. But in reality, Vietnam, for instance, is negotiating a mutual reduction in tariffs. India and the US, of course, have been talking about a mutual reduction in tariffs. So while I agree with Professor Arun Kumar that the formula used by the US is completely arbitrary. I mean, Trump administration's formula is completely arbitrary. But the argument that they're making is that it's not just tariffs that China imposes, but it has non-tariff barriers. And we know this. China has at least 1,500 non-tariff barriers. It has other means of ensuring that it does not import very much from the rest of the world. And if that is the case, then what needs to... So the rest of the world should not be trading with China as if it's a normal country. Unfortunately, the rest of the world is collateral damage now in this contest between the US and China. And the tariffs that have been imposed on us, for instance, are much higher than most people expected. But it's important to understand that IT is facing no new tariffs. So our entire IT sector, software sector is facing no new tariffs. Pharmaceuticals are exempt so far. Those are two
Semiconductors
very
as well.
Semiconductors, yeah, we've just started producing semiconductors. We don't export much of those yet. But yes, they are exempt as well. And now in terms of things like textiles and garments, Vietnam and Bangladesh were beneficiaries of GSPs, the Generalized System of Preferences for emerging developing economies.
Okay.
So, and our GSP benefits were withdrawn by Trump in June 2017.
So you're looking at the silver lining which is there.
So what I'm saying is now, until now, we were paying higher tariffs in the US market for our textiles and garments than Vietnam and Bangladesh were paying.
But
now,
here's the problem.
Vietnam
We
and
don't
Bangladesh
know what we are
more.
going to be paying. Professor Arun Kumar,
We are going to be paying.
what are we going to be paying? There is very little clarity. Do you think perhaps the government should come out with an assurance? That hasn't happened so far.
We are going to be paying.
I'll just come to you, but Professor Arun Kumar, can you take that?
Yeah. So, agriculture is a big issue for us because 60% people still depend on agriculture and 85% of the farmers are small farmers who cannot bear the price decline that may take place. So either way, whether we reduce tariffs on agriculture produce coming from the US, the farmers will suffer. If the tariffs remain high in the US, our farm produce will not sell there and therefore prices will decline. So agriculture is a big pain point for us. The other thing is that if the US economy demand goes down because the workers' real wages go down, then overall demand in the economy will go down. So even though relatively we may be better off, but we will also suffer a decline. So it's like saying if there's a forest fire, then everybody gets singed. Some may get singed more, some may get singed less. So the overall demand in the US
We're running out of time. I'm sorry to interrupt you, Professor Kumar, but quick closing comments. PK Basu, you were shaking your head vigorously. You don't think that it's a forest fire where we may get singed a bit less than China?
We are going to get singed much less than China. The simple fact is that China is going to pay.
Is that good enough?
A 54% tariff, and we are paying 26%. So a lot of the iPhones produced in China are going to start shifting to India. There will, if you think about a lot of steel and aluminium, etc., it will be reshored to the United States. There will be a boost to US manufacturing as well. And our exports, you see, first of all, we are not that export dependent. But to the extent that our exports are going to benefit from much lower tariffs charged in the US market than our key competitors, Bangladesh, Vietnam, China, Cambodia, Sri Lanka. They're all paying much higher
tariffs. That's an interesting one because at the end of it, we may be more resilient, but we are not insulated from what's happening outside. Yes, our fundamentals, many economists say that they are still strong, but we'll have to wait and see how we can tide over this market. Thank you so much for joining us. Unfortunately, gentlemen, we are out of time. PK Basu and Professor Arun Kumar, we are going to be holding on essentially to your SIPs, because you really don't know what's going to happen if your money goes into the stock markets. So hold on to that, hold on to your portfolios. No need for a panic selling spree at the time being. Wait and watch. That's what the economists have advised. Without a short break, don't go anywhere.